So you are looking at the Evolve Lunch and Learn presentation. Get fired up. This is going to be the second meeting that you do with an agency, and this is going to be something where you will pitch in your first meeting, hey, we can come in and train all of your producers and account managers on how to not only understand coverage, but be able to articulate it and sell it to all of the renewals. And we're going to do it really different than any other competing market out there because most traditional insurance carriers are going to tell you that this coverage is based upon privacy and data breach. And I'm here to tell you that it's not, and that's not what sells policies. So with that in mind, we're going to jump straight in. This is something that if you're doing this correctly, you actually get licensed in terms of CE credit. It's continuing education. And CE credit is something that on a property and casualty license, which every broker and account manager has, they need to maintain all of that credit every couple of years, something like 24 hours worth of credit. And so if you get the licensing from Evolve to give out this presentation, you're gonna have full rooms of people. Also, I highly recommend bringing through food, and you wanna stay away from chains. So Panera is what everyone seems to do. If you find like a local food place that everyone loves, and you find the recommendation from someone in the office, you bring it in, everyone's gonna be super happy, and they're gonna wanna come in and see this presentation. So, this presentation is gonna be way easier than the products and services because all you're doing is really just telling the story. You're telling the story of claims. So, let's dive in. Okay, so you've heard of this coverage as privacy coverage, and traditionally on this coverage, it was actually a liability coverage. And I'm here to tell you that cyber insurance, the easiest way for you to understand or maybe articulate to clients something that makes sense as opposed to the word cyber, because it's a really broad word. Actually, I'll call it hacker insurance, and that seems to resonate quite a bit. And all we're going to be talking about today is the top two types of attacks, how they relate to coverage, and then provide some real claims examples that Evolve has personally experienced. So the question you have to be asking your clients is, can my client survive a hack attack? So let's take a look at the marketplace today, because we need to actually take a step back and look at the history and figure out where we were, where we're at today, and what's in the future. So cyber as a coverage has been around technically since 1997, right when software companies were emerging onto the tech scene. And the reason cyber coverage was around is different technology companies started to have platforms that businesses relied on. And if their platforms went down, this concept of business interruption became a real thing that actually applied to software companies, which you would find currently in a cyber insurance product. Well, then that morphed over the years into tech E&O insurance, and that business interruption was still in there. And then it morphs into standalone cyber. And standalone cyber got big because privacy breach laws in every single state started to pop up. And that's why you probably heard of this coverage as data breach coverage, because of the state regulation. Well, where we are today is it's completely morphed again, and now we're talking about hackers and what they're doing to meddle with businesses and all the costs associated that come out of the business's pocket, as opposed to anything liability related. The marketplace right now is between $5 and $6 billion gross written premium. That's just in the United States alone, and that's the money spent by businesses on monoline cyber insurance, so a standalone product. We expect that to grow by 30%. That's been the trend year over year. So if you do the math, by 2025, we actually should be closer to about $25 billion in gross written premium. The common misconception is that this coverage is expensive. It's actually extremely cheap for some of the broadest products you can get in the marketplace. like Evolve's, and our minimum premium starts around $1,000. Now that's interesting to know because you're going to get a lot of business owner policies, BOP policies, that have these small cyber limits that are going to be charging close to that $1,000 in additional premium. You do want to stay far away from those, and you want to look at a full-blown standalone product. And with that in mind as well, it's also worth noting it's a very, very soft market. There's over 100 competitors right now, but we're seeing claims harden up. So now is the time to look at purchasing because you don't want to be 5 years down the road, miss the wave, and have much higher premium because claims are going up. And that leads me to the coverage is evolving. So hackers are realizing businesses have deep pockets. They're realizing that they're easy targets. They don't have very much security in place. They can trick people. And so you're going to see coverage is changing based upon the actual hack attacks pretty much every 6 months. And Evolve is unique because we have the ability to update our coverage on the fly because we're backed by Lloyd's of London. So we pretty much update our coverage every 6 months to a year to be in line with the most modern hack attacks. So it's a bit of the Wild West in terms of coverage right now, but you're talking to an industry leader in terms of what we're able to offer. So you're looking at 3 of the prohibition bank robbers in that era that actually died robbing banks. And the reason I'm showing you John Dillinger, Barron, and Babyface Nelson is that back in the day, the quickest way to get a quick buck was to go to a bank, guns blazing, and steal money directly from the bank. Well, now, flash forward to modern day, the quickest way to get a quick buck is actually to sit behind a computer in a foreign country where you can't be traced and look to hack businesses for money where they can get paid almost immediately and anonymously. There's really 3 types of groups that we see that do these attacks when you analyze it. You have individual hackers out for personal gain, like Albert here, who stole 170 million credit cards. He's actually arrested and in jail for nearly the rest of his life. You have organized cyber crime groups that think of them like the mafia. It's a bunch of hackers that get together and they work as a team, and together they're much better than one person. They're more effective. And then last but not least, you've heard about it in the news, but North Korea, China, all these other countries are looking to hack into the United States and figure out our information. Well, some of those hackers end up not hacking for good, for personal gain. By the way, the United States has an elite team of hackers as well, and we're hacking other countries. So there's a little redemption there. So the reason that you have this slide in front of you is because if you grew up in a work environment in the 70s, 80s, even 90s, and sometimes, I'm not throwing you insurance agencies under the bus right now, but sometimes you'll find those paper files. And if a robber were to go into your business today, or in the 70s, 80s, 90s, and steal those paper files, it would be devastating to your business. You wouldn't be able to operate how you would normally operate because that's all information you're relying on to provide your professional services. Well, if all of that data were destroyed, that's what we're talking about as far as where the future is and right now. All of our information, for the most part, is moving into the cloud, into servers that we don't see. It's hard to conceptualize. And when we see nasty claims, that data that you rely on in your day-to-day operations to work in your professional services is completely destroyed or damaged or rendered useless, and you're no longer able to provide that service. These are what we call your intangible assets. So let's talk about some common misconceptions before we get into the claims. You have heard about large data breaches in the news. The most recent one was the Marriott. You've heard of the Home Depots. You've heard of the Targets. You've heard of these really, really big companies. They're publicized because for the most part they're publicly traded and it has to go into the news. You're never going to really hear about small and mid-sized businesses because at the end of the day, let's be real, you don't want a nasty story coming out about you as far as your reputation is concerned as a business to hit the news. And the sad reality of the situation here is small to mid-sized businesses are the #1 target for hackers. So what we have seen, and these are stats that one is by IBM, one's by the actual US National Cybersecurity Alliance, is that the majority of attacks are on small businesses. Think about it, they have less money for security controls, and they probably are not implementing the best procedures or practices in terms of security. And then they are also the most vulnerable to go out of business because, again, they're small businesses, and these attacks can cost millions of dollars. So that's the target, and that's the number one size of businesses that are now purchasing. So I'm showing you right now, and this is just purely from an educational level. We had a claim that came in where there's 25,000 health records stolen. You've heard of this coverage as something where it's like, oh, this is data breach coverage, and that's why you should be purchasing it, and you're going into records. And most businesses are probably going back to you and saying, well, we don't really collect that many records, or we can't even quantify how many records we collect, and we can't put a number on that. And it's very, very confusing for you to explain their actual exposure, and that's where the sale falls down. Well, when you actually analyze this particular claim of these 25,000 records stolen by a hacker and $249,000 worth of costs, guess where the majority of those costs come from? I'll take hands. Yes, Bo, guess.
Data recreation.
You would actually be close, but the majority of the costs, when you analyze them, are actually now spent on forensic experts. So forensic experts are the professionals that come in that specialize in these hack attacks, these data breach attacks, and they're the ones that try and come in and actually repair any data that could be destroyed, figure out if they can recover any data, and ultimately patch that security hole to make sure that the hack is stopped and that the hackers are completely out. They charge about $500 an hour. So they're very, very expensive, but without them, you can't get your data back. So you gotta think of this policy, the first and foremost thing is you're getting access to a forensic expert that is being paid like a lawyer. And those costs can get out of control, and if you can't get your data, it could be devastating. Now, there's gonna be additional costs like data breach attorneys, their hourly billables, and then you're gonna have to comply with different state regulations, or federal regulations or private regulations, but those costs are gonna be minimal compared to the number one cost, which is forensics. So, you can see here 79% of the costs were spent on the forensics, and what I'm here to tell you is don't sell this coverage based upon data breaches, because businesses, there's just a disconnect. What you do want to sell it on is what we're going to get to in this policy. But before we do that, conceptually, I just want you to break down cyber coverage in your mind, because you're going to have to be selling it to your clients, and it's just really easy to break it down. All you need to know is there's just two buckets of coverage. The first is first-party costs. What you'd be saying is, we've been hacked, and these are the costs that are now coming out of your pocket as a business. That's about 90% of the claims that we see. It's pretty incredible. First-party coverage is going to make or break the cyber insurance policy. The liability portion, which is the third party, is you're being sued as a result of a hack attack, so it's negatively affecting the third party, and they're upset, so they're suing you. That's less than 10% of what we see. I'd argue less than 5% of what we see now. It's just no longer becoming what the coverage was. Now this is a first-party product. So, what are the two types of attacks that you need to know about that we see almost on a daily basis? And I will let you know that we have over 40,000 insureds on our books, and as a result, we see these claims on a daily basis, and so we can tell patterns, and these are really the only two things that you need to know. The first is ransomware. You probably heard the name, and we're going to go through that in depth. And the second is funds transfer fraud. You might have heard it as social engineering. Social engineering is very confusing for businesses. I would actually say stay closer to the word fraud, so funds transfer fraud. That's what you're going to find in our policy. But if you want to be playful and fun, call it wire transfer fraud, because the acronym is WTF. And that's what they're going to be saying when the actual wire goes through that's fraudulent. WTF. So, let's look at ransomware. What is ransomware? Well, you're looking at what would be a ransomware image. And ransomware, the way it happens is all you need to think about is it's a virus that is sent out by hackers to tens of thousands of email addresses to employees, and you've heard of them as phishing emails. You probably receive a couple every week. And in those phishing emails, they look real, but they're fake. And so let me give you like an example that will be really easy clickbait. Has anyone here ever gotten a package from FedEx and got the tracking link? And that tracking link is come to you via email. It's very, very easy to spoof a FedEx email because it's a bunch of numbers and letters. Well, that's one of the common ones we see. Let's say this hacker sends out this phishing email of a FedEx link to tens of thousands of people. Now all they're waiting to do is they're just preying on human error, negligence of people that are curious, and they just click and they want to say, oh, is my package coming? And what they've actually done is they've downloaded a virus, which is ransomware, into their computer. And by the way, there's hundreds of types of ransomware out there. Once that virus is downloaded in their systems, it sits dormant. So it just sits there, and there's nothing that happens. And so the person moves on with their day, they think, oh, I don't need to notify IT, I'm totally fine. Probably shouldn't have clicked on that, but whatever. Well, what happens is that ransomware is purposely meant to sit dormant until about 3 to 6 months later, and then the hacker can go in and trigger the actual virus, which is ransomware, to then lock up all of the data that it got connected to. So why do they wait when it's dormant? They wait because they want everything on that computer to be backed up into the cloud, so the virus can spread into the cloud, or offsite servers, or any additional servers that are in the office, to then affect every single computer connected to where that data is stored. Once they trigger the virus, and they have you, if it's triggered in the backups, there's nothing you can do other than when you read this message, you go, well, I think I should probably pay the ransomware off to get all this data unlocked because the business can't operate and everyone's freaking out. You're going to pay in what is known as Bitcoin, which is a cryptocurrency, which is really, really hard to trace back to the origin. And that's where, and the average amount is about $5,000. That's where it's up to the now hacker to unlock your data. If they don't unlock your data, it's totally up to them because, again, they send it out to so many people, they may not unlock your data. It's about 50-50. If they don't, then after about 48 hours, your data gets destroyed. Note that there's usually a 2-day window on this. 24 hours is usually a lower amount of money demanded. And then the next 24 hours, in the 48-hour range, that's when you're being demanded way more money. And they'll usually specify what they're requesting. So again, this all happens from phishing links. That's the most common thing. But we've also seen it happen from software that was just vulnerable, and the hackers figured out a way to actually put the ransomware virus into the software, which is pretty crazy. What's the number one cause? Human error. People that are curious, they're just clicking on links. You're going to see a theme of that today with this coverage. What comes with the policy? Why is a cyber policy so important when ransomware is hit and clicked on and you can't access your data? Well, number one, we already talked about it, forensic experts. Forensic experts are worth their weight in gold because they're not like your IT department. Your IT department is there to deal with the day-to-day issues with your computer. They're not being paid to go in on a very technical attack and get all of your information back. Again, $500 an hour, that's going to be your number one cost by far. If it's really, really intricate, we're talking hundreds of thousands of dollars in forensic bills. But what could be worse is you lose all your data and you can't operate as a business. You could go under. Secondary to the forensics, and in a ransomware attack, a lot of the types of ransomware can actually extract your data because the hackers can then sell that data on the dark web. There's a price per each piece of data. Well, a lawyer, which would be a data breach attorney, is going to work directly with that forensic expert. We'll be conducting all of them working together as the insurance carrier to navigate the federal, state, and private regulatory privacy bodies that if you don't follow their legal code, well, they could hit you with a fine or penalty down the road and investigate you, which would require defense costs for an actual lawyer. Fines and penalties can range in the thousands to the millions depending on the regulatory body, and there's hundreds of them, which is crazy. So you need a data breach attorney, and for the most part, if information hasn't really gotten anywhere or it hasn't necessarily been extracted, you're going to get really low costs on their hourly billables. And then last but not least, you have a public relations firm. That public relations firm, you might think would be like, oh, if this hits the news, they need to be ready to go. Well, really, the PR firms are built in here to actually notify their clients the best way without losing your clients. So, again, when you look at all three of these are three professionals who give a policy. These are going to be, on average, in the tens of thousands of dollars. When it gets really, really crazy, and we'll get to that in a second, the tens of thousands of dollars are going to sit in insurance clause 1. We wrote our policy like a claim. So you're going to see right there, IT forensics, legal, and PR. You might get some costs as well that are associated with the breach, but that all sits in insurance clause 1. There's also a $0 deductible to speak to our claims handlers, which are former forensic and data breach attorneys, to get free advice on what to do. Pretty cool. We're very mean on how our policy is written like a claim. Well, when the claim gets really, really bad, and we're talking tens of thousands of dollars into millions of dollars, we're looking at really three major things that have happened from ransomware. Number one, your data has been destroyed, which is the overarching theme here. Once your data is completely destroyed, you are looking at business interruptions. So you're going to be losing profit for every hour that you can't operate at 100% capacity. Even if you're at 80% capacity, you're still going to be losing profit. Well, this policy will cut the actual check for the lost profit for not being able to operate. In addition, we're going to bring in third-party teams, we're going to bring in forensic experts, we're going to bring in professionals that are akin to what you're doing and pay your overtime costs to rekey and rebuild all that data. If that means calling up clients and calling up vendors to get and gather that information, we're going to pay the hourly cost to get the information back. Last but not least, we're going to pay the reputational harm, so the lost profit from losing customers as a result of your reputation being damaged after a breach, which can be significant. Let's check out some claims that we've seen. Oh, and by the way, that also sits in insurance clause 3. That's where you're going to see it really triggered. So, this is a truck repair shop based out of Indiana. You wouldn't think a truck repair shop has a major cyber exposure. Well, they had a decent sized operation, and the ransomware I mentioned, where it sits dormant for 3 to 6 months, that's exactly what happened. An employee clicked on a link, and they actually were not able to recover any of the data. All the data got wiped out and destroyed. Across 800 computers, 75 servers rendered obsolete. Their operations completely shut down. What does that look like in terms of the actual claim? Well, it was about a 3 to 4 week period to get this business back up and running. And what we realized very, very quickly is that the forensic experts could not go in and recover that data, so their hourly billables were nothing. However, business interruption, we were paying in that 3 to 4 week period $875,000 just in lost profit. And then secondary to that, we paid their employees overtime costs to call up all their clients, rekey all of that data back in, as well as a third-party team to come in to expedite that process. And you have to understand here, we are going to bring that third-party team in all day long because the business interruption is always going to be worse. So we want to get you back up and running as soon as possible. So this was a $1.175 million claim, which is crazy. This is a really fascinating claim. Architectural firm, 4 people, so not a big operation. They had less than $1 million in revenue. They were working on 3 years worth of projects. When they got attacked, it was actually through one of those software loopholes we talked about. So they just came in, and it was called WannaCry. Can you hit the news feed here, Shale? They came in, and all of their information was locked up. And they were not able to unlock that data. So what we had to do is we actually had to pay third-party architects who have much higher hourly billables to come in and rebuild about a dozen projects that they had been working on for the previous 3 years. So all in all, it took them a couple months to get back to where they were, square one, but that was $260,000 worth of hourly billables, which is pretty crazy for those technically trained architects. Cool. So claim number 2. We've already done 50% of the presentation, so good work for staying in there. Claim number 2 is funds transfer fraud. You know it as Bo?
Wire transfer fraud, social engineering.
Yeah, but we're gonna call it WTF for fun.
Let's do it.
And just simply put, you wired money to the wrong place. We're gonna go through kind of where we see these claims. Just know that they really attack 2 vectors. The first is senior executive officers. Why? Because they have access to the bank accounts of the actual business. Secondary to that, they're attacking clients. They're tricking clients of the actual business. They could be posing. We'll see. We'll go through a few of those claims. What are these caused by? Bo, you might actually have a good answer to this one.
Human error.
Oh, you're staying consistent with the theme. This policy really only picks up claims that are caused by human error, but at least that's where we only see claims. It's all down to people that are just not asking questions and they're just being tricked by hackers. All of this coverage sits in Insurance Clause 2. It's our cybercrime portion. Now, we are super unique, Evolvez in particular, because we protect 3 separate bank accounts. We protect the insured's bank account, the deepest of pockets, arguably. We protect the senior executive officer's personal bank accounts if they get hacked on a work device. So we're talking about their personal assets. And we protect the bank accounts of the clients of the business, third-party bank accounts. We'll go through each type of attack. So, like we talked about, the number 1 type of attack is based upon human error. So you can actually summarize about 90% of these claims as someone gets a request for wire and they just wire it out. And that's an actual claim. You could say, and I would caution if you're going to say it, your insurance is stupid. So this was a yacht maintenance company. They had a vendor email them that they thought was an actual vendor, it was just a hacker. And then they wired out $67,000 to the hacker's bank account. There's about a 48-hour period where you can recover the wire. But in this particular instance, they didn't catch it until about a week and a half later. And so that $67,000 was gone. And once the money's gone, it's just gone. So let's raise the stakes a little bit, because these claims do get big. You're looking at a $927,000 claim. This was a real estate investment company, and they were convinced to do 2 separate wires to what they thought was their general contractor, which would be a standard request for that general contractor because they were working on a very, very large commercial building, but it ended up being a hacker. And so what you actually look at when you're looking at this particular claim is, we got a call saying, hey, we wired almost $1 million out to the wrong place. They're freaking out. You now have the senior executive officers of that business that have to put up another $927,000 of their own cheddar out of their own pocket. And so you're looking at a $1.8 million loss. Well, luckily they had a cyber insurance policy. We were able to indemnify them for that $927,000. And ultimately, they got their money back that they had paid out of pocket. And the project, more importantly, continued onwards because usually there's time deadlines that you have to get to in an actual build process. Another type of claim that we had here, and this is just for example's sake, was a property management company. Now this one was down to stolen login credentials. So I mentioned about 90% of this is like people just wiring money to the wrong place because they're not questioning anything. Well, about 10% of this that we see is a hacker actually steals the username and password of someone's email. And from there, they then meddle with when payments are coming or going. They figure out the timing of everything, and they just actually go into your email, they just change your bank account details. Pretty smart as far as the hacker. So they have to be really prepared and organized for this. So this particular one, they got in to a property management firm, to the actual insured, the CFO, the actual email address of the CFO, and then from there, they ended up they ended up changing the wiring details of what they were wiring money to, and eventually they wired $162,154 out to what would have been a client of this property management firm, but really it was just the hacker changing the bank account details in the email correspondence. Pretty creative stuff. And then the other types of attacks that we're starting to see now, and these are the newer ones, is I mentioned they were going after clients. And it's the same way. It's employee-based error, and it's getting into the credentials. But just know that this policy is actually built to cover your clients. So if you're a business and you have this policy, and one of your clients thinks that they're wiring money to what they think is your business, but it's actually a hacker's bank account, that client's gonna be pretty pissed off. And in this particular instance, it was a trucking retail company, and it was a client that was wiring money to purchase a truck. And so they wired $67,000 to this firm, and ultimately the dealership never got the actual money. But they had this insurance policy in place, and they had a limit that was there to indemnify their client for the lost money. Now, why are we offering this coverage? Because it's pretty crazy that we can offer third-party wire transfer coverage. Well, we're offering this coverage because that's not going to be a client for life. The fact that you actually indemnify someone's mistake that they just made on their own, and they were able to still, purchase that truck. Because you got to think, this doubles every time. If they wire money to the wrong place, well, if they still want that truck, it's going to be another $67,000. You're looking at $130,000 loss, which is crazy. So this is one where we ended up reimbursing our insured to help to reimburse their actual third-party client. And that's going to be push payment fraud in the policy. All right, and here is the future. So you've done the top two things. You've done ransomware, you've done funds transfer fraud, WTF, whatever you want to call it. The future is system outage coverage. So this was added in our policy as of 1/1 of this year. It's really, really fascinating coverage because what we're going to do now for you is you don't actually have to have a hack attack. If you rely on any single third party, so whether that be the cloud, whether that be a tech provider, or, and this is where we go even further, a supply chain partner. So let's say, for example, you're a manufacturing company. You're not relying on a tech provider, but you rely maybe on a few other manufacturers in the chain to build your end product. You can put them and endorse them on the policy, and if they go down for any sort of system outage, we're talking hardware, we're talking software, let's say, for example, they go to update their systems and it completely fails, and as a result, you no longer get access to whatever end product or service that you need to continue as a business. So we're talking about dependent business interruption. We will cover you for that business interruption. So this concept really can be applied to any third party that you rely on that has a system outage. So it's as broad as you think it is, literally for not being able to perform that good or service because their systems are not operating how they normally would. The only caveat here is it has to be longer than 8 hours. Now you can actually Google right now, for example, Ignite, that's the cloud-based service we use. You can Google Amazon Web Services. You can actually see trends of how long they go down for on the internet. Every single cloud provider, they're, by nature, they go down. And they go down every single day. Most people don't realize that. But businesses can now claim for that because it could be devastating to their day-to-day operations. And at the end of the day, it's seen as cyber coverage. So Evolve's doing that, and really no one else is. So before I leave you, I just want to let you know that when you buy this policy, you actually get access to 5 different vendors that are risk management vendors. They come for free with the policy. They're about $5,000 if you were to get them on the open market in terms of their retail value. And they're just different services that are going to train your employees, because we talked about your employees are the #1 issue. They're going to train your employees on the common types of attacks. You can actually send out phishing emails, which is pretty cool and very funny to laugh about in the office. Who continuously clicks? You can figure out your security, where you're at today, and how you can improve. You can actually build a plan to talk about, hey, when that attack does come, what do we do as a company? And monitor your information like a burglar alarm on the dark web. So, in summary, every single business has exposure. Why? Every single business has, for the most part, email. They're all emailing. And secondary to that, they all have bank accounts. That literally applies to every industry. So when you think of this coverage, it actually, for the most part, applies to generic industries. Coverage is the best that's ever been in the market. We just talked about system failure coverage. It's brand new types of coverage that are in there. There's a lot more I can go through, but this policy is now going to protect you for a lot of the things out there that you wouldn't have gotten 5 years ago. It's becoming worth its money. And as we know, it's not if an attack happens, it's when. Something will go wrong eventually. So, moral of all of this is coverage is cheap and you can protect your business today for next to nothing with a really good product. So that's Evolve MGA. Thank you for listening. Now, if you do this presentation, I put at the back half of this presentation all of Evolve's product and service presentation. So you might be in a room of insurance brokers that go, well, what does Evolve do? How do you do it? And that's where you can get out of presentation mode, and from here, you can scroll through and answer any of their questions on what we do and how we do it, because you're now master of product and services because you've already done that presentation. That was presentation number 1. This is presentation number 2. And you can just look like a fucking legend. With that, we're out. Peace.